handling objections is the number one thing stopping you from hitting your annuity production targets. And so in this video, I'm going to take you behind the scenes inside of our private client community, Agent Shift, and I'm going to go through these objections that may be stopping you from delivering more value to more people. And know that when we talk about increasing your income, it's by being more valuable to your clients, driving an impact, going beyond best interest, leaving people better than you found and putting them in a better position, doing the right thing for them. And sometimes that means sending them in a different direction than you. And so a lot of times on this channel, you may see results, and we're not making any income claims that you are going to get the results. It's just that these people applied our systems. They did the work and got a great result by using us as leverage on the outcomes they desire by being more valuable to their clients. And so you have to figure out handling objections if you want to grow your impact and income. And so I just want to scroll through some of this list of objections here. And before I do that, I just want to let you know the number one principle that informs your ability to handle any objection. Now, what are objections? They're any form of resistance to progress that you encounter in a conversation, right? And so when we handle objections, the number one principle that I need you to adopt is that all objections must be met with agreement. One of the things I like to say is you have to take it on board. You have to dance. You see, when someone is dancing, right, there's a leader and a follower in a dance, and you have to be the follower. When somebody kind of gives you some type of resistance objections, you have to kind of take it and flow with it and dance with it. You have to first accept it. You have to first adopt their reality. You have to first allow that person to feel in control. And the way that we do that is that we join them on their side of the table. We exhibit empathy by adopting their reality, even just for a moment, so that they feel understood, not that so that you can make them understand, right? They must feel understood. They must feel that they are right to allow their mind to remain open so that you can take that dance and redirect it towards an opportunity to put them in a better position, to leave them better than you found them. And so the first objection I got from David here is, I don't like annuities. I'm going to add to this objection, right? You might say annuities suck, annuities bad. I'm not interested in annuities. Please don't tell me this is an annuity, right? And in any form of that, here's the first response I'm going to make. Yeah, I think you're right. I think there's a lot of garbage out there. And, you know, most of the people that we work with, whether we do an annuity or not, like had that feeling. And what I found, the reason they felt that way is because either they or the person they got that feeling from was, you know, severely undereducated. And what that leads them to experience is the garbage that is out there, which, to be honest, most of the stuff that's out there is garbage. And so I completely agree with you that a lot of annuities absolutely suck. Would it be a ridiculous idea, though, to consider the possibility that you might find you can get exactly what you want from your retirement by actually pursuing a good annuity? Would that be completely crazy? That's how I would handle that. Right? And so a couple things. One, I agreed it. You're absolutely right. I'm going to actually defend their position. I'm going to join them on their side of the table and say, hey, there's a lot of garbage out here. Hey, here's another thing that you can do. Just stepping back outside of the explanation. You say, you know, like anything, there's good and bad in everything. And, you know, to be quite honest, the reason you feel that way is because most of the annuities out there are garbage. And that's because the person presenting them doesn't know any different. They don't know how to, you know, the difference between a good annuity and a bad annuity. And that leads you to thinking that all annuities suck. Does that sound like your experience? Hey, what was it that that you heard or saw that led you to feel that way? And kind of after you get an agreement, get them to describe it, to exemplify how they arrived at their opinion. And you know, in that line of good and bad annuities, right? The thing is, there's so many things, like there's good doctors and there's bad doctors, but I find that most people who encounter a bad doctor don't give up on the profession. They don't say medicine is a lie, no more, right? Or, you know, very simply, there's good and bad haircuts. Like, hey, have you ever gotten a bad haircut before? You ever seen anybody? Did you just stop cutting your hair? No, you understood what was bad about it and then pursued the good in other sources, right? So these are some metaphors that you can kind of help people through. But first thing you want to agree, then you want to defend their position. This is what good debaters can do. So you want to agree, say, yeah, that makes complete sense. I can appreciate why you feel that way because, and then defend their position. And then ask a no-oriented question, which I learned from Chris Voss, and it gets full consideration. Say, hey, is it crazy to consider? Is it a ridiculous idea that once you understood what made bad annuities bad and ultimately what made good annuities good, would it be ridiculous to consider that maybe you can get exactly what you want by understanding what annuity could do that for you, right? And then you'll get full consideration. So that's the first one. Let's go on to some other questions, right? Some other objections. I don't know you. Can you send me some information? Can we talk further? Well, I mean, here's the thing. If you're selling in a virtual environment, then you absolutely need a way. You need tokens of trust online to demonstrate and deliver credibility. And so you need to have a way to do that. And inside of our training, we teach you how to do that with some information, which means you send information before, hey, here's who we are, here's what we're about, here's what we do for you. We have slide templates that you can kind of record with a loom, kind of like this on your screen and say, hey, before we meet next, I'm going to send you some information so you can do a little bit of research on us, right? And so you can do that, right? So that's one way to handle it. But you also need some visual, some virtual tokens online, right? You need a website. Now, one of the things we do for our partner agents at Juicebox Partners is that we give them a way to affiliate, right? JBP Group, right? And so I don't know you, right? So you can go to jbpgroup.com. You can pull up this page and say, that's Bernadette right there. So for Bernadette, since she is a partner, I'd be like, hey, listen, you can do that. You can also say, hey, you can go to the TFRA.com. Now, I believe that Bernadette's on this campaign, so she should be on there. She is right there, right? And so you can say, hey, listen, I'm a part of a nationwide network of financial professionals who help people uncover opportunities to have more and worry less in retirement. And so you can see here I am as part of the JBP Group, and I'm a licensed affiliate of the TFRA. So you can create some credibility with that. So that's some of the ways that you can do that. But literally how you show up. Here's the thing. Let me give you an example of tokens of trust. And what I'm talking about, these are the tangible and intangible things that demonstrate and deliver trust and credibility to your clients. And so when you're operating in a virtual environment, certainly how you present yourself on video, right? And hey, let me give you an example. Your setup, if you showed up on video like this, is this trustworthy? And so one of the things we teach inside of our training is a virtual selling setup. We teach you how to fix this so that you can understand your bounce lights and then your key light at the right light so that your eyes are lit up so that you can deliver unconscious trust, right? And so that's one of the things, but how you communicate and the tokens of trust that you establish in this virtual environment is everything. Certainly having online assets like the websites we talked about, but the best metaphor I can give you is you walk into a doctor's office, right? And, I imagine that you have a similar experience that I do. It's like, they kind of call your name, you look over your shoulder, the door is open, and the person's standing there in a white coat, maybe some scrubs, and has what hanging around their neck? A stethoscope, right? And the first thing they ask you to do is what? Step on the scale. Right? And these are all the tokens that establish trust that, I'm in a doctor's office. And so how you communicate, how you demonstrate credibility, and the tokens that you use in a virtual environment are everything. And the better you are at this and the better that you communicate, the less likely, because no one walks in that doctor's office and says, hold on a second, doc. Let me see your credential. Let me see your board certification. What school did you go to? Look, can I see your test scores? Right? Nobody asked that because all the other tokens that establish trust in the environment, you need to have those, and what you say and how you say it, what you show and what they see and how they see you are all reasons why you will get these questions or not. And so, hey, we kind of hit this one. How do you overcome that? I heard TFR is a scam. Absolutely. I can see why you feel that way. I think there's a lot of garbage out there, and not all agents are those who are licensed to sell it are educated to structure the right solution for a TFRA. And to be quite honest, I'm not even sure it makes sense for you. I want to actually find whether or not you could benefit from such an account and then see if we could get you qualified for something like that. And so Tell them they're right. Agree. Defend why they're right. There's a lot of people that don't know what they're doing. Or they think all things are created equal. And to think all cars are the same would probably be the same, mistake. Like, hey, listen, if I told you, I was going to deliver you a high performance sports car and made you think that it was like one of the fastest cars in the world, you'd probably be expecting a Ferrari. And if I showed up with a Mini Cooper, you'd probably be a bit frustrated. And I think that's why many people would maybe come to the conclusion that defend their reality, that a TFRA is a scam, right? And so, and I'm not even sure if you need it. So what I would love to do is just first understand where you're at and see if you're on track, see if you actually need any help at all. And through that process, be able to determine whether something like that would even be suitable for you. And if so, how would we structure it? And how would it benefit from you? And to put you in the most educated position to make the best decision for you. And so would that be a reasonable approach? You might not even need my help. I might be able to give you a virtual high five and say you're on track, keep doing what you're doing. But it doesn't sound like you even have that certainty yet. So how about we start there? Understand if there's anything we even really need to solve for. And ultimately, we might get to the conclusion of whether a TFRA would be right for you. Because certainly, if you don't need it, somebody pitching it to you, that'd be a scam, wouldn't it? Right? And so defend their position. All right, here's another one. It's not FDIC insured. Annuities aren't FDIC insured. Yeah, they're insurance. They're not under banking regulation, but every state has an insurance fund. And so the couple things that I would speak to is that number one is that your state has an insurance fund, much like the FDIC, that covers per carrier contract up to $250,000. And so you have similar coverage. And if you have more than $250,000, just like you would segment it across multiple bank accounts, if it made sense to have more than $250,000 in annuity for you and that was suitable, we could segment it across multiple carriers and then gain that coverage on your state insurance fund across multiple carriers. And then, ultimately, I just want to let you know is that we also look at, I only work with A-rated carriers. And the thing is no A-rated carrier has ever failed, right? Just like banks, even with FDIC insurance, can fail, no A-rated insurance carrier has ever failed. And so that's another way that we protect you in addition to diversification across carriers so that we have that state insurance commission insurance coverage. Great. Awesome. My financial advisor said, okay, and how is that serving you? Right? What I want to do is have them come to the conclusion. Mike's a $800 million plus producer, so that's awesome. My financial advisor said, awesome, great. And how is that serving you? How is he serving you? How is she serving you? Right? And just basically create a wedge. It's like they're saying this, but they're not delivering what you want. Usually when they do that, there's a contradiction that you can expose. My spouse doesn't want me to move money now. Oh, okay. Well, why do you think they would say that? And why do you feel different? Great. Oh, you feel different because we went through this process. What if do you think it would be in your best interest that if your spouse came to the same conclusion you did? Great. How did you do that? Awesome. Well, how about we bring them on and we walk her through the same process so she can arrive at the same conclusion you did? I only want to work with a fiduciary. Oh, okay. Well, I just need you to know that my license requires I have the same fiduciary obligation to act in your best interest. So if I present anything at all, know that it's based on the mathematical reality that it would put you in a better position based on what your individual needs are. So I have the same fiduciary obligation. Can you refer me to someone you've worked with? And listen, if you get this all the time, you're probably not establishing credibility, and you probably need to have somebody that you have worked with that can vouch for you. You won't get this pushback if you have those other tokens of trust, right? You don't walk into a doctor's office, it looks like a doctor, feels like a doctor, he talks like a doctor, and then you say, hey, listen, doc, before I step on the scale, can I talk to one of your patients? I'm waiting for the market to recover. What if it never does? Hey, what if I could give you instant recovery right now, guaranteed? You might be saying, how do I do that? Well, let me show you. If you're an agent thinking, how do I do that? Maybe you need to be in a community like this. All right, let's go to the next one. Too young to move money and not enough saved yet. Okay, so you need to uncover disposable income, a monthly cash flow, show them their income gap, especially with inflation, and say you need to save more. Listen, there's only 3 factors controlling the quality of your retirement. How much are you saving, where are you saving it to, and when you're going to retire? You're not saving enough, and you're not putting in the right vehicle that's going to yield the fruit that you need to have the income you want to have the lifestyle you're accustomed to in retirement. And so let's look at that. So you just need to expose the problem. Your TSP Rescue is one of our campaigns, but you're thinking that it's an annuity play when it's a savings accumulation play. Maybe it's a TFRA solution. Let me talk to my spouse. Great. What information can I give you to support that conversation? What do you hope to achieve? That would be awesome. Many people want to run this by your spouse. They're part of the decision. That's great. What do you expect them to say? Is this kind of ask for permission? You make the decision together, or just keep them in the loop? One of my favorite things is, what do you think they'll say? Well, what if they say no? Listen, if they say I'm going to do it anyway, then okay, great. I ask forgiveness rather than permission. If you could do it anyway, why don't you tell them about the decision you made rather than, get them to prevent the one you want to make, right? If they say no, I'm not going to do that. Well, why do you think they would say no? Well, what do you feel? Well, I want to do this. Why do you feel that way? Because I went through this process. Great. How about we take them through this process and allow them to have the same information that you're making your decision upon? There you go. IUL has no guarantees. It has a floor guarantee. The thing is Faye, my question to you is, what's the goal? If the goal is max accumulation, the question is, you can structure the policy more, right? You can structure the policy. The U in IUL is universal, meaning you have control over premium structure to allocate more to cash value. And so I actually, in our training, let me actually go to this real quick. Okay. And I believe this is in Product Mastery. All right. So this is in our fundamentals workshop. If you go to IUL Product Fundamentals, and then the comparison worksheet, and you come over here, we can actually do this, right? If we take a $500 premium and we say 70% goes to cash value versus 50% on whole life because of policy construction, even if we can see that the IUL, like, look, let's just say this averages 4. Look at that. If this IUL averages 4% crediting, while this gets 5.5%, 4% guarantee with a 1.5% dividend, right? Look at this. Look at how much more benefit we have in the IUL. And what this is effectively saying is, even after 20 years, we have 17% more, even at a lower average crediting. It's because more went to the cash value because of how we can structure premium in an IUL or any UL. And then the idea is, like, can we get to 6%? Well, look at that. We're at 48% more over a 20-year period of funding. And so can we get to a 6% index rate return if you're in a good product that allows you index diversification that's reliable from a crediting standpoint? Absolutely. Even if we got the same percentage, we can see that we have 40% more just because of the delta in premium allocation. So I would just show them the math. That's what I would say there. IUL has no guarantees, but if we're targeting greater opportunity for accumulation value long-term, treating this like a tax-free retirement account, which means we're saving now and accumulating for later, I think, if you're in the right product, it makes a lot of sense. I need more reading and talk to my CPA. Absolutely. I would love to get on with your CPA. We work with CPAs all the time. And my question is, are you looking for reasons to do it or reasons not to do it? Because if you need a reason not to do it, I can give it to you now. I would just tell you not to do it. But if you would like help in educating them so that they can advise you from their lens of expertise, absolutely, we'd love to get on with them, do it all the time. And I need to do more reading. Great. You're not establishing us credibility as the source, but what you want to do is like, hey, listen, I can be your ultimate resource. What specific information what do you need more research on? I probably have the resources much more handy than you that I can provide to you. Take it from there. I'll reach out to you later. Have a lot going on. Absolutely. Most of the clients I work with are really quite busy. See, always agree. Later this week or later this month, that would be better. Always give 2 options to choose from and then drill down from there. I thought this was something else. Oh, that makes a ton of sense. Yeah, I mean, there's a lot of things out there. What were you expecting? Boom, dig in, pivot from there. I'm worried about locking my money down. Well, a lot of times we're talking about people with qualified money. Your money is locked down, for 2 reasons. 1, early withdrawal penalty, and 2, taxes are a great constraint and restrictor. And then 3 is like, well, what do you really need liquidity for? One of my favorite questions is, what's the biggest check you've ever written? And the question is, will you have that liquidity? Because look, if we had, let's just say $1 million and we put 60% into an annuity, or even 50%, that means we have 10% free partial on that. That's 50 grand plus the other $500,000, right? So that's 550 grand. Is that enough liquidity for you? Yeah. I think for most people, when they realize the benefits they gain through a 10-year surrender period, I'm too old for this. Oh, okay. If I met you 10 years ago, oh, okay. The question is, do you still have the problem now that it solves for? Yeah, I can appreciate that you feel like you're behind. But my question is if it solves for the problem now, still, why wouldn't you do it? Okay. So that's how I would approach that. How exactly do you make it tax-free? It really depends. There's a lot of ways that we go about it. And I'm not even sure if it's possible for you. What I would love to do is we literally just compute the math and we see if that you would be in a better position by solving for taxes than you are right now. That's not always the case. And a lot of people don't have the mathematical capability to even determine that. And so what I would like to do is just really crunch the numbers and show them to you so we can be on the same page of whether this even makes sense for you. And once we understand the math, then we can start to understand how it could work for you. I can make better returns in the market. Absolutely. Over the long term, the market will outperform. The question is can you afford to take the risk chasing those returns? What we found is that most people don't realize that there's two phases to retirement, the accumulation phase and the preservation phase. And you're in the preservation phase, less than 10 years to retirement. And so we need to consider that we can't keep all our eggs in one basket because you can't afford a retirement do-over, meaning that the market downturn that on average happens every 5.5 years or 20% or more, the average being 34%, right? Whether you can afford to take that risk or not. And the question is like, we're not asking you to move all your money. That wouldn't be suitable. What we need to ask is what amount of money should we protect? Because we're not trying to chase return with all your money. We're trying to preserve your money so it lasts forever. So it's there when you need it for the lifestyle you wish to maintain in retirement. There we go. I had one 20 years ago, had to take out my money, didn't work the way we told it. Yeah, I've heard that story many times before, and I find that it's true for two reasons. Number one is that most agents, 2 years from now won't even be in this business, and it's because they're severely undereducated. And so we'd like to take a, kind of an objective, like, math-based focus on this, or whether you should even do something like this. And then the other reason, so it's an education gap. And the other thing too is 20 years ago, man, the products were dramatically different. Market competition and everything like that has made them better. I'm not even saying it makes sense for you, but I would say if it could put you in a better position, and in many cases guaranteed, would it be ridiculous to even consider? Everything sounds good, almost too good to be true. Let me speak with my CPA relative in finance. Almost too good to be true, right? So this happens when you're focused on like features and benefits, not problems to solution. Like you hear more of this. And the other thing is like you don't want to wait for your client to say this. At the end of the question, it's like, hey, what questions do you have? And if they don't say anything, it's like, hey, do you want me to tell you the top things that, are on the mind of most of my clients who I wind up working with are? And great. Number one is too good to be true. Let me tell you why it isn't. Because the insurance company's making money too. That's why, right? You're getting these benefits because you're on a 10-year commitment. You get it for your commitment, you get these benefits, right? And you can just go down that path. I'm a bit busy for the next few weeks. Let's schedule a call follow-up next month. Is this just a creative way for you to, get rid of me, or are you actually interested in doing this when you have a bit more time on your hands to focus on your implementation plan? And then if they say, I'm not that interested. Okay, yeah. So I take responsibility for that. I wouldn't have presented this if this wasn't in your best interest. And so would you like to take the opportunity to dive a bit deeper so that you could see it for yourself? Because it's not about what I know to be true. It's about what you can believe and see for yourself. And then you try to resolve it from there. But if you lost credibility, you take it as a lesson and you move on. Can you do a meeting on Sunday? Typically, that's time for my family. I'm not sure if that's a priority for you as well. But if we were using that time to be very efficient and to make some serious progress, it might be something I could carve some time away from my family to do. What are we looking to achieve, right? And get them to anchor the commitment. Listen, I'd take that meeting if we're like signing an app. You got me at a bad time. Call me back later. Absolutely. Most of my clients are really quite busy. What time of day is better for you? Validate their feelings and then go in for a commitment. I want to let you know, there's a lot of information here. It makes complete sense that you would make a decision today. In fact, I wasn't expecting you to. This sounds too good to be true, right? Whether they bring it up or you bring it up, it's the number one reason. You seem to overcome it. Are you a scam? I can appreciate we don't even know each other yet. That's why the first step in this call is really to get to know each other and for me to actually uncover whether I can help you or not. I think a scam is somebody who's going to tell you to act immediately and they're going to expect to move the money to them. I'll never ask you to act immediately. And number two, I'll never ask you to move the money to me. If we decide to do something, it's going to be transferring the money to an A-rated company that I'm just going to guide you through that process. I'll never touch the money. So there you go. How do I know a theme? We can just go online and search. Most objections up front on the Q call leading into the problem call. Follow it eliminates most objections. I don't feel comfortable discussing finances with friends. That's a credibility thing. Hey, listen, would you do me a favor and maybe just make up some of the numbers and then you could see the process. And then if through that you see value in maybe refining the numbers because of the power of doing your math and seeing where you could maybe enhance your strategy, we can cross that bridge when we get there, right? So see if you can just get them to the meeting because the whole goal of this is like practice with your warm market. So tell them to make up the numbers. And if you can't get them there, then they don't see value in it. You're just next. IUL has too many fees. I hit this real hard on my YouTube channel the other day. So it's just when you're structuring with the right product, it's just not accurate. So let me go to view your channel. right there. The myth that IULs are created equal. I hit all the fees very specifically in that. So I would go watch that on my YouTube channel. It's just an insurance policy. I don't need more insurance. Absolutely. That's why when it makes sense, if it would even make sense for you, I'm not sure yet, we would structure it with the minimum amount of insurance for you to gain all the tax benefits that are outlined in the tax code for you to have a tax-free retirement. So that's how I would handle that. And that, my friend, was every objection handled. Quite a long one, but hopefully you found value in it. And if this video is valuable, tell me what you learned on it. What objection stood out to you? What do you feel like you're going to implement? Drop it in the comments, drop a like on the video, and subscribe for more. We'll see you in the next one.